Hi, this is Jack from Alpha Charts with a state of the market video. Today is June 18th, 2022. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Couple things first. If you haven't already subscribed to my channel, please do. I really do appreciate that. It means a lot to me. Go and like the video as well while you're at it. You could also find me at AlphaCharts365 on Twitter. I'm always posting charts, ideas, comments, midweek updates, whatever. So check me out there. And last thing is, it was announced that the Trader Lion Summit is going to be happening again. So I just want to make you guys aware of that. It's at Trader Lion on Twitter, but it's going to be just an amazing summit. Look at these names. I also will be presenting. I think my topic is going to be on how I evaluate market health. Again, so I'll be kind of going over what some of you've asked for, actually, which was what does each thing in my state of the market actually mean? So I'll be going over that. And then I'm going to take it a step further, and I'm going to be going over, I think, at least 3 or 4 of my scans on FinViz. So some I have not shared most of these scans with anybody, so I'm going to go and share, I think, 3 or 4 scans I do, and purposes and how I build my scans and what I think about as far as building scans in general too. So it should be a good conference. It should be a great conference, actually. I mean, Jack Schwager, David Ryan, Mark Ritchie, James Ropel, Denise Scholl. Just amazing. Roy Maddox is on there. Tendler's on there for the psychology part. Brian Shannon, amazing. Ray, I haven't seen much of Ray, but he's a great trader. Caruso's on there. Leaf's on there. Tom Canfield's on there. Tom Basso's on there. Christian Fromhertz is on there. Pat, Scotland, Ben. Just absolutely what a lineup. And I think there's going to be more to be announced soon, actually. But right here, just phenomenal. So I think it's going to be over 2 weekends. It's absolutely free. So definitely make sure y'all check that out. Okay. But let's get started with state of the market. Enough of that. SPX. So bigger picture here, terrible week in S&P. You want to go to a weekly chart, and week was down 5.79, absolute rough week. But we're at an interesting spot here. So this is prior resistance turned into support, and it's the measured move from the head and shoulders, say 13.5%. And then when we go through there and come down here, it's roughly 13.5%. That's the measured move, right? So the way I look at it, also very high volume day, it was quad witching. So volume to be much higher is expected. But so right here, could we see a bounce next week, especially early next week? I think it's very possible we do, for these 2 particular reasons, right? But zooming in, let's be honest, we're in a severe downtrend. You have every moving average from the 200-day, this red line, the 50-day, and also the 23-day and the 9-day, all going down, right? They're all declining. So the trend is lower. Any bounce, which we could get a bounce, maybe even up to this 3850-ish area, I would expect, maybe the 20-day, 23-day, whatever comes to this area, any bounce we get, I would expect to be a place that if somebody wants to short, can short, or can just stay in cash. Don't be caught up in this bounce. If this is the bottom, great. There'll be plenty of time to make it and get lots of uptrend. But as of right now, no signs that this is the bottom. And again, any bounce should be suspect. So we can see that SPX. Let's go to RSP. RSP was, again, up a little bit, and on the week it was down 6.8. So it was down much more than the SPX. So what does that tell you? That tells you that the selling was widespread, and they didn't care what they were selling. They were just selling everything. So that's not good, right? Again, it's about another 11% down to this area, which was the 2020 highs, right? So that's kind of the area that is next major support. Where we're at now, I would consider to be minor support, right? Especially the SPX. It's support, there's no doubt, or maybe intermediate support, whatever. But this is the next major support, which is the 2020 highs, especially in the RSP. There's a good ways down until then, about another 13%. Again, on the equal weight, that's a gigantic move, right? Maybe 10%. So big move. Could we see a bounce back? Yep, probably will. Maybe all the way to this VWAP from the COVID lows, right? But I would treat anything like that suspect unless we started making higher lows and higher highs. So be very careful there. In the Qs, when we look at the Qs, we lost the VWAP from the 2018 lows. That's not good. I mean, we're losing level upon level upon level. The next major support, again, is that 2020 high, which is another 14% lower. There's also a trend line that comes in there. So when let's go to weekly. When we look at the weekly chart, you can see this trend line from the 2010. So this whole uptrend trend line is right in here on this 242, 235-ish area, whatever, right there. Going back to daily, on the daily, you see that's the trend line. That's the potential area from the 2020 high. That all kind of comes together right around here. Again, it's not a timing mechanism. I don't know the exact time, but we'll roughly say, a few weeks, it can get down to here, 237-ish or something like that. Again, that is another 13% to the downside, and that'd be that's very painful. Equal weight Qs. So equal weight Qs are actually back to the 2020 highs. That's really scary, actually. That's a big deal, right? That's a big deal. If it loses this area, Lordy, how far back are we going to go, right? I would say right here makes sense. 47.50. Let me just draw that in because that's what we do, right? It's technical analysis. You lose an area, you look for the next potential area. Let's just say right here. That to me looks like a major area right there. And let me see if it's at 13%. Oh, it's more. It's about 20% lower. Could we get there? Maybe. I mean, equal weight Qs losing everything. Just terrible looking. But yeah, so if it loses this area, but again, I don't think it's going to go straight down. Look how extended it is. Probably going to bounce first and then probably continue lower until we see some sort of stabilization, which is not present yet, right? Just not present yet. IWM. Underneath this, right? 2018 high, 2020 high, and prices lower than it. I mean, not a good look at all. Chances are, again, if we get the bounce early, especially early next week, we bounce up into here, something like this. And then my expectation would be that, right? That's the expectation. Now, if it doesn't do that, then we have expectation breakers and we then can reevaluate the situation. So that's, based on this price action, that's my expectation. We'll see what happens. But IWM not looking good. Man, looking pretty rough. Probably somewhere around here. maybe something like that, maybe something like this, you know. Yeah, that's what I can see. Yeah, I mean, very possible. Let's just see what that's from here. Another 20% or so. So similar to the Qs. Could it be? Could it do something like this? Sure, why not? Yeah. So just be very mindful of this. Especially early week bounce next week into this potential overhead supply. This is the more likely scenario, in my opinion. Looking at growth, IWO, small cap growth, same type of situation. Watch for that early week bounce and then potential. Again, if you're into shorting, that could be a spot you may want to short, right? Up here. Because if it continues higher, you're wrong. And that's, that's a good risk reward if that's what you're into. All right, so there's IWO. Let's look at the mid caps here while we're doing this. Mid caps. I mean, major support is a little bit lower, another 9-10% roughly. Yeah, so there's your mid caps. So nothing is holding up. They're getting to everybody. Oil and gas names got demolished this week. That's what was holding up. And when you go to weekly, they were down 17% on the week. They got absolutely murdered. But looking at my normal ETFs, we'll look at XLF first. So XLF, let's look at this on a weekly basis. They're back to the scene of the crime, right? Scene of the crime being the 2007 highs, then again 2018, then again 2020, and now we're back here. There's your 200-week moving average right here. Maybe that offers some potential support. I don't know. Going to the daily, it's right there. Again, got to see a bounce here, right? I mean, why wouldn't we? This would be the area. And then what does it do? I mean, the more likely scenario is this, but let's not be opposed to this either, right? I mean, that's a possibility too. So we don't know which one's going to hit yet. Just be careful. I mean, everything is saying this is a strong bear market, and what we think could be support may not actually be support. But this is a big area for financials, right? We lose this area, and it's bad. It's bad. SMH. So semiconductors, maybe the most important sector, lost this area right here. That's a major topping pattern that has now completed. Again, am I another one where I think it's going to do something like this? Yeah, most likely. That's the more likely scenario here. I mean, everything is saying that we are in, again, a strong bear market. Nothing is changing my mind yet. Again, early week bounce next week, and then maybe another move lower for semis. Not a good look at all. So this is where I would go into lumber, wood. And lumber is completely breaking down. Next potential level of support is down here. We'll see if it recovers first or not. I'm debating whether I want to switch lumber and just use the XHB, which is a home builders index ETF. It may be a better signal. We're going to find out. But I'm going to look at both of them for a little while. But if you look at the home builders index, again, here's your 2007 highs. Again, 2018, 2020. And now we're coming back into it. So maybe this will lead. It's about another 10%. Go back to daily. About another 10% lower. So home builder index may be a better indicator. And look how this is accelerating to the downside. So if it could get into this area and maybe start to bounce higher before the rest of the market, maybe that's a better indicator. So again, I'm keeping an open mind, right? I've used wood for a long time, but maybe home builders are just cleaner. We'll find out soon. Moving on to the VIX. Let's get rid of this. Sorry, not weekly. Line chart. Get rid of the moving averages. And it's still elevated at 31. That's really all we need to know. We're not in a trending market, right? That's what it tells us. Looking at bond yields, bond spreads, credit spreads. Oh, let's get rid of volume 2 because I don't really care about volume. And, they're moving higher, right? I mean, not the look we want to see. It's higher highs and higher lows, and they're widening, and we don't know how high they're going to go, but not what we want to see. This little pullback here, that was nice, but in the end, it was a fake out. It was a retest, and then it just moved higher. Has not made a higher high yet, but again, nothing is saying that it's rolling over, that there's any sort of top right here. So if credit spreads are widening, it's a risk-off environment, in my opinion. But call ratio, man, I'm telling you, people are just getting bullish on anything they see. This was Fed day, and you saw how many people piled into calls. Then the next day, boom, right back bearish again, right? Next 2 days. So never got to an extreme level, got very close to it here, hence the bounce. But I want to see things above 1.4. That is what I'm looking for. That's extreme. And maybe we're close to that. Maybe we get a bottom, maybe not the bottom, but maybe a bottom, right? Maybe a tradable bottom. We can do that, right? Why not make some money when if we have a period of time, maybe it's a month, maybe it's a few weeks where we can make some money. But I want to see this capitulation first. Not quite there yet. A-line geometric, get a measure of breadth. Breadth sucks. That's what they're saying. MMFI, which I kind of like maybe a little bit better, is telling us that breadth sucks. But is it extreme? Not extreme enough for me. Again, just like the put call ratio, kind of got close to it here, then recovered some. I want to see it in this green zone. This green zone is a potential contrarian buy zone. So let's see the put call ratio get extreme. Let's see MMFI get extreme. Those are secondary potentials for bottoms, right? So again, it's what I'm watching. We're not quite there yet. And if we get a bounce early next week, again, those bounces are giving us just enough to keep us out of these areas, these extreme areas, and it's keeping this bear market going. I think people are still hopeful. So a bounce, my guess would be, would come back into this closer to 1 or so on the put call, and on the MMFI, it would probably bring it back up in this 30-40% range, and just keep us out of this green zone, right? Keep us out of this bottoming zone. So it is what it is. Just keep watching them, right? Gold continues to do nothing. So what does that tell you? That people, everything's getting hit. There is no safe place. And then let's talk about Bitcoin. So here's Bitcoin, and Bitcoin is completely breaking down. Maybe this is the capitulation that we need to finally see. Next up, I think would probably be these highs, right? So looking at maybe 14,000, somewhere in there. That's what kind of makes sense to me. There was last night, if you were following me on Twitter, you saw that I reposted something from Ryan Selkis about some whales that were bringing Bitcoin off chain back on chain. Usually when that happens, it's to sell. Didn't have to be to sell, but that's probably what's going on here. And I think that this weekend you see Bitcoin really get demolished. And I think that would bode, I think that's a negative for the market, right? That's a risk off. That's a longer term problem, not only for the Bitcoin market, but for the total market. So where are we in the state of the market? My opinion, state of the market is we're still in a red light. Say the market is bearish, no new buys, be patient and wait. Cash is king. Again, if you want to tactically short, if we get the early week bounce, that early week bounce like this, then maybe, right? Then maybe like that, maybe you could short up here and know you're wrong right there. If you get above 300. But I would say that right now 237 is the next potential target. And so you be careful out there. Don't get sucked in any kind of bullish scenarios yet. I mean, we're not making any higher highs or higher lows at this point. It's all lower highs, lower lows. We're in a downtrend. Be patient, wait, save your capital. Save your capital, because when the times are good again, they're going to be great, and it's going to be easy. It's like shooting fish in a barrel, right? Waiting for a fat pitch. But right now there are no fat pitches. Right now times are lean. So again, if you're going to short, maybe short up here, not here, up here, where if we are wrong, we know pretty quick. And if you're not shorting, then I think cash is king, and stay patient, and you will be rewarded eventually. We don't know when that will be, but eventually. Don't forget, check out Trader Lion. This is coming up soon, next month. So sign up for this. Again, Trader Lion right here. Richard Moglen. You probably, you may know Ray from Twitter. All these guys. They're all just phenomenal. So yeah, you got to hit that up. All right. Hope you all have a great week. Stay safe out there. Don't get sucked in. We'll talk to you later. Bye.